Hey guys, Boris House from BK4. Welcome to our Forex weekly technicals for 0421 to 425 2014. Where are the trades? Well, it's obviously Easter weekend, much quieter action in the currency market today, so we're going to start a little bit early. Start with the euro because I think it's very interesting. It's obviously at some very interesting juncture here. We had the moves through 38.50, kind of got rejected yesterday, but the fact that the euro sort of came back down to 38, held the 38 or this in this week's trade, and came right back up, suggests that we definitely have potential here for the upside. As long as this 38, let's say 37.75 bottom holds here, we have a potential further upside. The interesting story, of course, this week, first of all, Monday is going to be dead because Europe is still away on Easter holiday on Monday. But Tuesday we have the really key piece of data, which is the flash PMI data coming out of Europe. If that's positive, that could give us a little bit of a push, may even perhaps push us all the way through this 39 test. The market clearly, to the upside, wants to challenge the ECB and wants to see if it can push the euro all the way out to the 140s. On the other side, the jawboning and everything else not having much of an impact, but still keeping a lid on the trade, as you can see, because the highs have not really been penetrated. So in some ways, next week will be a pretty crucial week. If we can break above and hold this 39 level, it certainly puts us into a very, very positive structure and really sets us up for a potential run towards the 140. You still have to overcome this resistance at around 39.50, but it definitely puts you in a much, much stronger structure if you're above 39 on a closing basis. On the other hand, if we just sort of mush around here, can't really muster much of a upside bias, the natural tendency is going to be to try to sell them as they come in, and then the supports are going to be very key here in the 38s, which will probably give way certainly, but then the really big support is going to be 37 and 3700. This will be the double bottom test. That'll be very, very important. Looking at this right now, it still looks with a mild bearish bias. So every rally is a sell sort of into this 38, 50, 39 area until the 39 area is broken and taken out, at which point then the shorts capitulate and the trade becomes much more positive. So sort of a mild negative bias, but be wary of an upside breakout here in the euro that could completely change the picture. As far as dollar yen goes, the structure here getting a lot more bullish for the longs. We've had decent data out of the U.S. We've had a little bit more positive dollar movements in the 10-year Treasury. Whether this is another false dawn, very hard to say, but you can see basically in a technical structure, the dollar yen continues to hold this 101.50 level, and we continue to sort of make further and further forays into the upper ranges. It's still a very, very mild rally, kind of hard to get too excited about it, but on the other hand, you have very limited risk here. This is an early stage of potentially a big leg up. The risk here is only about 100 points because the bottoms below the 101.50 would clearly negate the upside move. So for those who want to spec, this could be an interesting longer-term dollar-yen trade. Pound dollar struggling, took out the highs, but struggling. This is the third time it took out the highs, but struggling to take out the 68.50, but still kind of holding underneath here. Still looks to me like it's a powerful buy, and definitely fundamentally wise, it's very, very powerful on the buy side. And a move through the 68.50 perhaps next week post holiday, when we have more liquidity, less choppy markets, would definitely put this on mark towards the 69.170 mark. So it's been frustrating for those who want to try to trade breakouts of this thing, but I think the next breakout could be the real thing, and that's why it's worth watching above the 68.50 on cable. Aussie, on the other hand, just marking time. This 93.94 has been the consolidation range here. Aussie definitely has resisted around the 95s, and probably really going to trade to the upside only on dollar weakness. It's hard to get too bullish on the Aussie side because the fundamental story is pretty much stationary as is. China is certainly not going to be a big powerful puller to the upside. So it's really organic Australian growth, which is good, but not going to be extraordinarily great to really want to consider the potential of RBA rate hikes, which is the one thing that could potentially push us further up. So it leaves us only basically to sort of an anti-dollar trade at this point, and we'll see how far we can go. Clearly 95, big resist. Let's just go back on the levels. You can see here, this is the 95, and this 94.95, that was the failure before. Clearly the failure now, double top here. And more importantly, actually, the failure here through 93 would really solidify a much stronger version of a double top, and a retrace all the way back down to perhaps 92s. So near-term bias in Aussie looks to be more bearish than bullish. Definitely looks actually quite interesting on the whether it's going to underperform on the crosses at this point as a potential sell trade on the crosses. We'll take a look at the complexes in just a minute. Kiwi has the RBNZ decision this week. It's going to be interesting to see because if they do not raise rates, if they sort of go on a 6-month cycle instead of a 3-month cycle, that certainly could weigh on the Kiwi. We could have more distribution. Remember, Kiwi's gotten hit by a couple of big negative hits. First of all, milk prices have been continuously going down. That's the single most important input factor to growth. Secondly, the market is starting to feel that perhaps they've overreached on the factoring in of interest rate hikes. There's about 117 basis points factored into the Kiwi. Maybe there's only going to be 50 to 75 basis points actually of tightening, and therefore Kiwi may have just overreached. So kind of worth watching this distribution top. If the RBNZ does not hike rates, there's a potential here to break 85 and perhaps flush us all the way down to 84 on a capitulation basis. So definitely worth watching this for this week. That's going to be a big event. And then dollar CAD, it got a little bit destroyed by the more dovish BOC tone, but then the data started to come in, and data is kind of been relatively okay. It's certainly been supporting the fact that there's a mild bounce and recovery in Canada, and therefore dollar CAD seems to be kind of just holding this 109, 110 level. It's possible for us. I mean, technically, it still looks quite good to run towards the 111s, but there is a massive resist here at this 111s, and I think it's going to encounter a lot of selling. So it could be a sell the rally here if you do get extension. On the other hand, there's probably decent support here at this 109. It's basically 111, 109 range trade in dollar CAD, and playing the edges of those ranges would probably be the smart thing to do over the next several weeks. So that's how the majors shape up. Let's take a look at the crosses. And specifically, let's take a look at the odd crosses, because I'm kind of interested in looking at the odd complex on the cross level. So Aussie yen, one of the things you see here, for example, is that even though dollar yen has rallied, Aussie yen has not, signal of Aussie weakness. On the other hand, where you do have some Aussie strength is against the Kiwi. And it's really starting to move towards this 109 level. It needs to clear 109.50 to really completely negate this whole downward move and really put ourselves into a very, very good-looking W bottom, right? So if we have a strong W bottom, and this is an interesting story where you could have Aussie be weak against everybody else, but not necessarily weak against the Kiwi, which is going to get perhaps even weaker if the RBNZ does not cut rates. In fact, a more interesting trade could be the long Aussie Kiwi against the RBNZ non-cut versus just the short Kiwi to the upside. So definitely worth watching both of those trades next week. On the other hand, if you look at the Aussie against the European currencies, first of all, pound Aussie, right? If we like the pound to the upside, sorry, where's my pound Aussie? Here's pound Aussie. If we like the pound to the upside, this looks like a relatively decent trade above 180. A break above 180 doesn't really encounter too much resistance all the way out through the 185 level. We've had a big correction here as Aussie pound is corrected off the 190s, and this looks to be a pretty decent breakout potential here to the upside on basically both pound strength and Aussie relative weakness. Euro Aussie is not as clear, but it does suggest that at least you have support here, the 147s to the top side. So perhaps some turn trades in the Europeans against the Aussie, but not necessarily Aussie Kiwi, which still looks to be to the top side. And then looking at the yen complex, just because yen is starting to percolate here, Euro yen still in a budding. This is the same kind of a trade that you see in dollar yen, sort of a budding rally, easy to kind of take the risk here because you have relatively small risk, 150 points on a positional basis, and hope that there's a further upside move towards the 144s. And the other trade that looks to me strongest, of course, on the yen complex is this pound yen, but it does need to take out this 172s. If we can take out this, these moves above 172s, then the higher trades, 173s, 174s, basically sort of like, if you can power through this 173 resist, you have a very, very strong chance here then to try to challenge the highs at 175. So on the yen basis, pound yen perhaps may be the more interesting trade. This all obviously assumes that the pound gets his mojo back next week. That's how everything shapes up. There's quite a lot of interesting side trades here that are happening. I think the crosses perhaps are going to be the more interesting trades next week. But of course, the big focus will be the European theater with European data, and we'll see if the euro can actually negate all the naysayers and take out the 39s, or whether it's finally going to start to crumble and we start to see 37 as the week progresses. Wishing you guys the best of luck, the best of trading. Boris Schlossberg over and out.